Hey everyone, welcome back to Corporate Decoder, the place where we unpack the nitty-gritty of business so you don't have to. Today we are looking at the Federal Home Loan Bank of New York, and boy do they have a report for us that dives into how they fund themselves. So this is a Form 8K, which is basically a report for big events that happen outside of the regular reporting schedule. Here we see a report from the 30th of September 2025. This is the Federal Home Loan Bank of New York, or as they call themselves, the bank. Now, how do they get their money? Well, it turns out they get most of their funds by selling debt securities. Think of it like borrowing money, but in a much more formal way through the financial markets. These debt securities are called consolidated obligations. They're a mix of bonds and discount notes. What's interesting is that these are not just the responsibility of one bank, but are actually a joint and several obligation of all 11 federal home loan banks. This means if one bank has trouble, the others can be on the hook for it. They are regulated by a group called the Federal Housing Finance Agency, or simply the Finance Agency. And get this, the Finance Agency can even tell one federal home loan bank to pay up for the debts of another if needed. It's like a huge financial safety net for these bonds, but also a potential risk if one bank falters. Now, they have put out a Schedule A in this report. This schedule lists all the consolidated obligations that are committed to be issued by these banks, where the Federal Home Loan Bank of New York is the main one responsible for repayment. It also includes any obligations that have more than a year left on them, where they've taken over the main repayment duty from another bank. But here is a key point. Schedule A does not include things like interest rate exchange agreements or other derivative instruments. These are financial tools they might use to manage risks tied to their borrowing. So while they tell us about the debt, they are not necessarily telling us about all the complex financial maneuvers they are using to protect themselves. And another thing to watch out for is that Schedule A doesn't give you the full picture of their total debt. It skips over discount notes with a maturity of a year or less, essentially short-term borrowing. It also doesn't tell you if the money they borrow is just to pay off old debts that are coming due. For the total debt picture, you have to look at their regular financial reports. Also, the amounts listed on Schedule A are the face values of the debt, called the principal amount at par. This can be different from what you see in their official financial statements prepared under generally accepted accounting principles. That is because the face value does not account for things like discounts or premiums they might have paid or received. It is a bit like saying a $10 gift card doesn't tell you if you actually paid $10 or $9 for it. So we have Schedule A here, which gives us details on newly issued or assumed consolidated obligations. For example, we can see various bonds and discount notes with different maturity dates. While they don't highlight specific dollar amounts in the main text, the detail is in the exhibit. And at the end, we have the signatures, including Eugene Kezin, Director of Funding and Liquidity Management Treasurer, who has signed off on this report. Now let's talk about what this all means. The Federal Home Loan Bank of New York is essentially a massive wholesale lender, funding itself by selling bonds to the public. They play a crucial role in providing liquidity to member institutions like commercial banks, credit unions, and insurance companies. By issuing these consolidated obligations, they're raising the capital needed to lend to these institutions, which in turn supports housing and community development. The fact that these obligations are the joint and several responsibility of all 11 federal home loan banks is a significant structural feature. It creates a system where the strength of the entire network underpins the debt. However, it also means that the financial health of any single bank can impact the group. This is why regulatory oversight by the Finance Agency is so critical. They are the watchdogs ensuring the system remains stable. The exclusion of short-term discount notes and derivative instruments from Schedule A is a common practice for these types of filings, but something investors should be aware of. It means that to get a complete picture of the bank's leverage and risk management strategies, you need to consult other parts of their financial reporting, like their quarterly and annual reports. Looking at this filing, we see the bank is actively managing its funding needs through the issuance of debt. This is their core business model after all. The report doesn't signal any immediate financial distress, but rather a routine update on their debt issuance activities. The key takeaway is the transparency regarding their funding mechanisms and the shared responsibility of the federal home loan banks. From a Warren Buffett-style perspective, we want to understand the business model and its sustainability. The federal home loan banks have a very solid government-backed structure, which provides a degree of safety. However, like any financial institution, they are exposed to interest rate risk and credit risk within their member base. Their reliance on capital markets for funding means they are also sensitive to market conditions and investor sentiment. The fact that they aren't required to disclose specific dollar amounts for every single issuance in this particular report means investors need to do their homework and look at the full range of their SEC filings to assess the overall debt load and its associated risks. Ultimately, the Federal Home Loan Bank of New York is a vital part of the financial system, and this report gives us a glimpse into its operational side, how it raises the money. It then lends out. It underscores the importance of understanding not just the headline numbers, but also the underlying structures and potential risks involved. Alright, that is our breakdown of this Federal Home Loan Bank of New York filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.